Looking at these fast food names in our 360 round. Shake Shack, new highs, hit 95 and change today. Over 1 year, it's up almost 70%. Wendy's, on the other hand, over 1 year is down about 16% and pulling back today. Nick Setyan's with us, Managing Director at Restaurants Equity Research at Wedbush Securities, and Sean Dunlop, equity analyst at Morningstar. Thank you both for being with us. So, Nick, let's start with Shake Shack. I mean, when I woke up and I saw it up 44%, I had to rub my eyes. I know it's since come back from there. It's up 22% now. These moves seem insane to me. And when you see these moves, do these stocks generally hold on to big gains like this? Where do you think, Nick, that Shake Shack should be and where it's headed?
Yeah, there is a lot of short covering going on today, but it is justifiable, Nicole, and thanks for having me, by the way. Ultimately, they're talking about positive transaction growth in 2024 after doing positive transactions in Q4. And even more importantly, their margin guidance is well above, expectations, both in Q1 and 2024. Even with some of the weather impact, we were expecting in January. So even inclusive of all that, their guidance is well above expectations. We're a company that, was supposed to be one of the more sensitive ones in an environment where the consumer is slowing down. So clearly no sign of that for Shake Shack. There are a lot of company-specific drivers that seem to be working very well, and more to come, it sounds like.
So Shake Shack at $96, where do you think it should be priced?
We haven't published our new model yet, so I'm going to refrain from talking about new price targets. But,
okay.
Given the uptick in EBITDA, it's fair to assume that, the price target should be higher.
Yeah. Sean Dunlop, I'd love to hear your thoughts on Shake Shack. I also know your picks are McDonald's, Starbucks, and Yum today. Those are the names that you like the most in this group, I would say. You tell us, please.
Yeah, so I may have to leave the good news to Nick. We don't actually cover Shake Shack here at Morningstar. Obviously, a tale of two burger chains with Wendy's results this morning. As you alluded to, as we think about our best picks in the current environment, we're looking for restaurant chains that have really strong unit economics. They're able to invest through the cycle and continue to drive unit growth, even in what's a pretty challenging environment, both from the demand side and also in terms of funding costs. We also like brands with strong digital touch points, particularly brands you think about McDonald's, you think about Starbucks with large loyalty program bases that account for a large proportion of tender. In general, those brands have been able to cater to consumers quite a bit better with more personalized offers. We're not seeing the sort of margin compression that we're seeing with smaller peers as well. Those are the sort of chains that we like in this environment. So our top picks are McDonald's, Starbucks, and Yum brands right now.
Yeah. And on Morningstar, you do have a price target, I believe, of 21, Sean. Is that right?
Yeah, going into earnings today, obviously they sort of missed on all facets. They missed our expectations for sales, missed on earnings. Comparable store sales of just 90 basis points growth in the United States was quite a bit weaker than we saw at Burger King with plus 6.3 and at McDonald's with plus 4.3. So I think it's fair to assume that that may tick down a little bit. With that said, guidance for 2024 was quite constructive. They pointed at 2% plus unit growth. They pointed at 3 to 4% comp growth, which is a pretty stark juxtaposition with the slowdown that we saw in Q4. To the extent that they're able to achieve that, I think there's plenty of upside with Wendy's. But obviously the market dropped a little bit on the news. I think there's some skepticism given how aggressive those targets are.
Yeah, and you talked about how they missed and showed weakness in comparison to the likes of McDonald's and Burger King. And there's so many names: Cheesecake, Cava, Domino's Pizza, Starbucks, Darden, Eat, McDonald's, Shake Shack, Yum, Chewy. I have a whole list here of names that we might be talking about. Nick, how did you feel about the Wendy's numbers? Where do you think that stock is headed? It's at $19 right now. Where do you think that stock is headed, and what names are your favorite these days?
Yeah, I mean, Wendy's is going to be an execution story for the near future. The numbers were obviously disappointing in Q4. um, they will have a lot of work to do to get to, those types of comps they're talking about for 2024. And the margin trajectory, especially with some of the reinvestments they talked about, wasn't something that investors wanted to hear. So, we'll see how that story plays out. But again, they're going to have to execute, towards those targets to get to, some of those expectations they put up for themselves. Uh, my favorite at this point is the two pizza names. I mean, I like their value positioning. Again, the both in my opinion are going to take share from everybody else in an environment where check management is paramount. So value to me is the most important component in 2024.
Yeah, Nick, the pizza names that you like would be uh, Domino's Pizza and Papa John's. Is that what you're saying? Is that
Domino's
right? And what was the second one?
and Papa John.
Okay, so yeah. And Texas Roadhouse is a name that you also spoke positively about at some point, right? You had an outperform there? Nick?
Yeah, I do like Texas Roadhouse. It's going to be the primary share gainer within the casual dining category. It has been, and it's going to continue to stay the primary transaction share gainer within the casual dining category. So that's a name that investors are going to gravitate to for the foreseeable future.
Yeah. And Sean, I'll give you the last thought. Is there anything else you'd like to add to the group of a name that you think has potential? Maybe it hasn't reached it yet, but you love watching?
Yeah, I mean, I think we've hit the high points Nick and I have today, and that's the restaurants that are able to compete on the basis of value for the money. Typically, the restaurants with a large base of system-wide sales and a cost advantage, your McDonald's, your Starbucks, those that have a strong digital footprint, those that have strong store economics. Those are the stores that continue to be rewarded by the market. Those are the ones where we see upside. Those are the ones that should continue to outperform on a traffic basis in a challenging environment. So yeah, we like McDonald's and Starbucks.
Yeah. Yeah. And Nick, quickly, what happened to the coffee wars? There were the chicken wars, the chicken wing wars. There were the coffee wars. Where do we stand on that, Nick? Anybody leading in your mind?
I mean, Starbucks won, and there's no real competition for Starbucks at this point. I mean, Starbucks is its own biggest competition right now. So, the coffee wars are over.
Oh, okay. And I know that we had Luckin abroad. There was talk that Luckin could take over Starbucks in China, but didn't do that. And Dutch Brothers was another one, right? And there's more. Anyway, I'm going to leave it right there. Thank you, since it's lunchtime. Thank you both. And people can go get their food. Nick Setyan of Wedbush, Sean Dunlop of Morningstar. Good to see you both. Thank you for covering all those names for us. And